Hey guys, this is Max Convexity. Thanks for tuning in to my channel. And this is Option Basics class. I think it's episode number 7. I made this trade yesterday right at the close. Not in real life. I made it with paper money. I was working on that video all day yesterday. I saw something on the close that I liked, so I made the trade and I loaded it into Option Strat. But I want to use this trade to teach. So we're going to talk about it today and we'll see how it works out. Also, I've said before multiple times, I don't believe that you can time the market, and I believe that's true, but I still like to try it occasionally. You have to have somewhat of an opinion, especially when you're buying an option, which way the market will go. So let me show you what I have going on right now. We went back to the QQQ today. If you guys remember last week, we took a shot on puts. Let me see here. We took a shot on puts, and see, new pane. I got to put this VIX of VIX down here. Anyway, this right here was volatility, and we saw the market was going up and made a new high. The QQQs did, and VIX started going up too. And so we took a chance right there. We bought some puts. So anyway, we sold them for. We made a double on our first lot. After a couple of days, it was down. I think we bought them on Thursday. After a couple of days, it was down. We made a double and we sold those and took the money we had invested off the table and used that money to buy another option at 420 in case we got a multiple day downslide. Well, we didn't get our multiple day downslide. In fact, it looked like whatever action we got on the downside was a bear trap, and now we're back on the upside. I love when the market closes on its highs, and I love when it closes out of the Bollinger Bands. If you can have a close out of the Bollinger Bands, and it's the first time you've been out of the Bollinger Bands in a couple of days, that's usually a pretty strong signal to go that direction. Like I'll show you the last time this kind of signal was, we had a false move on the downside or a one day move on the downside. Then right there on that day we closed outside of the Bollinger Bands. Okay, well, and also on right here on this day we closed on the highs. And then up here we opened and we closed a 30-minute bar outside of the Bollinger Band. So that would have been a nice place to put on calls. And sure enough, you got a multiple day, what is that, a 5 or 6 day upswing. In fact, we're basically still going up from back there. I don't know that this is going to turn into a trade like that, but we're gonna try it. So right at the close yesterday, I went to Option Strat and I just took the closing price. I got two 432s for $1.74 a piece. That was the ask. Now let's go over here to the option calculator. Like I say, don't really do these trades in real life. These are just for fun, but I'm using them to illustrate how calls and puts work, how intrinsic and extrinsic value works, and all that good stuff. So let's load up this trade. What was... All right, QQQ's at 428.15, and then we sold. We bought the 432s. All right, so I'm loading up the prices. We don't know what the price on expiration is going to be. We'd like it to be 440. Oh, something else we have going on. At the end of the month, lots of times they have what's called end of the month window dressing. It happens at the end of quarters too. We have the end of the month coming up in a couple of days. Lots of times, not always, but occasionally that will be the market makers, hedge funds, the people that participate in the market will run it up into the end of the month to make their positions look better. That's why they call it window dressing. It's a theory that I've heard since the 80s, 90s. And I've seen it happen a lot. I don't have any back test on it. I doubt it has any kind of edge because everyone knows about it. It's just something that I like to play. So just from a technical standpoint, when I saw that they closed on the highs and outside of the Bollinger Bands for the first time in a long time, I should have actually, this bar right here at 130 was outside of the Bollinger Bands, but I was busy making that video. I should have bought options right there. But then when it closed on the highs, it also closed on the highs plus the end of the day, the end of the month in a couple of days, it triple validated what I'm thinking. Now that's the good news. The bad news is futures are off a little bit this morning. It could have been a false signal, and false signals happen too. And that's no big deal if it happens. We're still going to use this just to teach, and it's just paper money. But it could also come roaring back today at some point. I wouldn't be at all surprised. All right, let's go back to the QQQs. All right, so back to the option calculator. So these are calls. So our strike price was, I guess I put the strike up here, 432. Okay, so we bought 2 contracts, and the price we paid was $1.74, which is $174 a piece. The whole trade cost $348. Okay, so let's look at an ending price here. I mean, you know, let's something else that's going against this trade also that maybe I wouldn't make it in real life. I don't know if I'd make this in real life. I probably would, um, but is that volatility still increasing? So maybe these guys know something we don't. Maybe this is a fake move. I don't know. But let's see here. If we did get a multiple day breakout, if it got back above here and got up here, let's just say, okay, that's Tuesday. So let's see, there's Wednesday, there's Thursday the 1st. So I think it might possibly go to 432, which is where the strike is. So that's not going to be that great of a trade. I didn't look at this before. It's fine. This is just for fun and entertainment. Let's say we get a price. Let's say we get it to go to 435. All right, 435. Those options would be worth $3. Paid 174 for them. It'd be $1.25 profit or 72%. You could also buy 200 shares of the QQQ, and that person would make well, for some reason, I don't think my long stock calculator is working. Don't worry about long stock right now. Anyway, we're worried about this 72%. That's what we're worried about. I'll fix that long stock calculator. I don't know what's going on. But anyway, we would make 72 cents. So I guess all I have to do is, I don't know why that long stock's messed up. All right, well, fine. We're just worried about our 72%. All right, so that's the trade. Now let's look and see how. Let's look and review our other trades in Option Strat. So our saved trades. We also have this Tesla long put that we're using to ensure in case Tesla keeps dropping. It looks like it may have turned around yesterday, but in case it keeps dropping, this put doesn't expire until February 16th. And we've already sold half of that position for a double. So there's no risk in this trade. It's a risk-free trade. If Tesla keeps going down, that's fine. If not, and it goes back up, we break even on the whole trade, basically. And the same thing, we have a closed trade from yesterday, expired or closed. We had another QQQ put trade. We lost 110 on, but the trade before that, we made 100 and something on. So that trade's a break even. Well, there it is. We made 102, and we took the profits from 102 and bought this option, hoping for a 2 or 3 or 4 or 5 day pullback. We didn't get it. It didn't materialize. So that trade's basically a break even. We lost $8 on that trade. The Tesla trade, regardless of what happens, we're break even on that too. So, regardless, even if Tesla goes up and this goes to zero, we're break even. So we'll see this. We'll see what happens. I'm going to make a spreadsheet that tracks the profit and loss. This trade right here is the trade that the managers from TRES have on right now. This is a ratio. Well, it's a ratio diagonal. We haven't got into those kind of trades yet. We're gonna probably do one of those soon. But anyway, I just put it in there to keep track of it. It's not one of ours in the option course. It's just in there. All right, so I'm going to edit this video and put it out on the web, and let me know what questions you have, and then later on today or tomorrow we'll check in and we'll see how our option that we brought today, this option, the 432 call, two of them, how they're doing. The game plan on this, as it always is I'm going to watch this, and if we do get a pop at any point and I ever get a chance to sell this for a double, it's at $1.74. If I can ever, make a couple $100 on it, I'm going to go ahead and close the trade, and then at that point roll up and out to some further out options in case we get a 4 or 5 day run up. And that happens a lot, especially on the upside and especially lately. Now we may be at the top also. Who knows? Like I say, these are just for fun and entertainment. I was going to try to take timing out of this and just show options, but to learn options, you have to have some opinion on which way the market's going to go. And I have 3 or 4 little techniques I use. One of them is, and I trade the indexes. I always have. I've been doing it since the 90s. One of them I look at is, did the index close on its highs or on its lows? And the other thing I look at is, did it close outside of its Bollinger Bands? These are simple momentum plays, is what you would call that, because you're going with the momentum. I like momentum. The trend is your friend trades. They don't always work out. Look, on this day we closed outside of the Bollinger Bands, and this day we closed on the highs. And if I would have bought calls there, that would not have been a good trade. So it doesn't always work. I don't know if this trade right here is going to turn out like this, where it fails, the breakout fails, or if it's going to turn out like this. We don't know, but with the end of the month coming up, I think there's a chance, we're going to take a chance on it turning out like this one down here. We shall see, guys. Thanks for listening. Leave me comments, and pretty soon we're going to start selling options. I know we've only learned about buying options. I need to make a new spreadsheet for spreads. We're going to start doing debit and credit spreads, and we're going to start doing butterflies. And it's going to get a lot more interesting, but thanks for sticking with me this long. I appreciate it. I'm just trying to make sure everyone has a good handle on buying an option. All right, so, because buying an option is the most basic thing you can do. Even if it's a money loser over time, you have to understand it. So this option, to recap, is all extrinsic because it's out of the money. I could have bought an in the money option. The market's at 428 and I went out to 432. So it's all extrinsic. So extrinsic will go to 0. So unless I can get above the strike price, like to 435, if I got up to 435, the difference between that and 432 is 3 points. So that would be intrinsic. The option's always worth intrinsic plus extrinsic, but extrinsic's 0 at expiration. So I need to get it to 435 by expiration to make this profitable. So we shall see. You guys have a great day, and I'll be back later, and we'll update this option. I'll watch it like a hawk, and I'll be back later with more option basics, maybe this afternoon or definitely tomorrow. Thank you very much. Have a great day.